Welcome to the pre-4th of July installment of the Whitaker-Myers Wealth Managers What We Learned in the Markets This Week video. Remember, our aim is to provide you, our valued clients, with a brief video giving you information that's helpful to your understanding of the markets while also drowning out the agenda of the news media in America. So let's talk about the 4 things we learned in the markets this week. First, we continually have addressed Wall Street and their overly optimistic prediction of future earnings. This idea has gone mainstream, and some of the commentators tie this to the street becoming lazy, overly dependent on guidance from companies, and fearful of angering management because of their low estimate of future earnings. The truth is that Wall Street has been overestimating their earnings since about the 1980s. With a 4-year exception, Wall Street continually starts off with too high estimates to start the year and then must cut that number as the year progresses. Secondly, U.S. corporate bond spreads over treasuries continue to climb the ladder higher. These corporate bond spreads measure the market's confidence in future corporate cash flows and earnings in relation to current and expected costs of borrowing. The issue with this number slowly rising is that low numbers reflect increasing confidence in cash flow and interest expense coverage. Rising numbers can reflect increasing concern about cash flow and interest expense coverage. Thirdly, Apple and Microsoft have not yet broken under the stresses of macro uncertainties, and that makes them key stocks to watch as Q2 wraps up and we head into earnings season. Between Apple's 6.6% and Microsoft's 6%, their weight in the S&P 500, which is at 12.6%, is greater than the rest of the US big tech companies combined. Despite tech as a growth sector showing very little growth this year, Apple and Microsoft are still cornerstones of the US equity market. And fourthly, the Russell, which is classified as aggressive growth in the Dave Ramsey world, is very close to pre-pandemic levels, while the NASDAQ and S&P 500 are still showing healthy gains from before the pandemic. The S&P 500 and NASDAQ have roughly earned 20% since 2019. Over 2.5 years, this is an annual compounding rate of 7.5%. Well, this might be viewed as okay or normal. It is quite remarkable given the rest of the world's stocks are down in dollar terms since year-end 2019. Some examples being Europe's down about 9.3%, Japan's down 10.7%, and South Korea is down about 16.5%. So in honor of the 4th of July holiday and celebrating our independence, we wanted to present you 4 facts about the 4th of July. So another country other than America that celebrates the 4th of July is the Philippines, not because they're celebrating us, but they were recognized as an independent nation on the same day. Approximately $600 million worth of fireworks is used in America on the 4th of July. And the first White House party for the 4th of July was celebrated in the year 1804. Now, hot dogs are the things we all love to eat. And every 4th of July, we consume about 150 million hot dogs. So why don't you add on to that and make some hot dog purchases on Monday and eat some. As always, if you have any questions about the information that was discussed today, go to the notes for this video and you can schedule a meeting through the link there with your financial advisor. We appreciate your continued trust in our firm and we look forward to talking to you next week.